As my brilliant executive producer, Brad Hurst, said, Liz, the low of the session is a loss of 398. The high of the session is 86. So we are continuing a move to the downside. We are down 129 and falling at the moment for the Dow Jones Industrials. But let's flip this around. Great trade. If you were long the VIX, or the volatility index, in 2018, you were in the money. Wall Street's fear gauge shot up 160% over the past 52 weeks. By December 31st, the VIX clocked its highest annual close since 2008. While the major averages, they all went south for the year. But the dark side of volatility is something investors must not ignore. The robotic herd is on a rampage, and you could get stampeded. Seth Merrin is the CEO of Liquidnet. This is an electronic trading network operating in 46 markets around the world. And your members, Seth, collectively manage, what, $33 trillion in equity and fixed income. That's a lot of assets.
That's a lot of assets.
That's a lot of assets. Okay, so let me go back a couple of weeks where even Treasury Secretary Steven Mnuchin turned and said all this volatility that we saw in December, that was high-frequency trading. He threw in, a few other things, too. But, I mean, that was sort of the nut of it.
Yeah. So
you say what?
High-frequency trading is the gas. It's not the fire. Something has to kick the fire off, and then high frequency is like putting gas on it and makes it worse. It exacerbates the problem. It's not the cause of the problem. So, we had a free pass the first year of Trump's presidency where we had historically low volatility. We couldn't understand it because he still tweeted every day, and it still, should have created convulsions in the markets. This year, it's the complete opposite. Now, every time he tweets some kind of a new policy change, now that starts volatility, and the high-frequency traders exacerbate it.
Okay, so let's talk about specifically what high-frequency trading is. This is super fast program trading that costs a lot of money. There are organizations and things like quantitative funds or quant funds that simply input, sell at this, buy at this, but they also have AI as well, so they can read headlines, right? The artificial intelligence.
It's very difficult to classify it in one broad stroke, right? So high-frequency traders, the bad high-frequency traders, I classify as traders versus investors.
Okay.
Now, investors, there is a correlation between the price of a stock and the fundamentals of a stock, right? And if it goes way beyond what that correlation should be, then you either buy or you sell, and that keeps prices within limits. High-frequency traders are investors. There is no correlation between those two really foundational elements. So that's why you can see stock prices moving, hundreds of percents in any given day, because they're just moving on momentum. They're buying and they're selling a penny later.
Well, I call it the robotic herd, and the investor out there, meaning many of our viewers, can get stampeded. Quant funds used to be a much smaller piece of the trading pie. You could go back a couple of years and see that back in, 2010 or something, that it was about 13%, and now that's more than doubled. So I'm wondering if there, at some point, is going to be a move by the Securities and Exchange Commission. I don't know how they do it, but split off the markets, do one for quants and high frequency and let you guys all battle it out and deal with it, and another for investors who look at a company, they like what the company's making, they like the CEO and the management, and they get their research done.
First of all, let's be clear. Liquidnet is the antidote for high-frequency trading. We are just collective, all the large investors in the world, and we dampen volatility. But the high-frequency traders, you could see it as a beautiful statement. Around Christmas, when the markets were so volatile, all the human beings went home. The only things that were left trading were the robots, were the computers. And there you could see the massive volatility going up and down just before and right after Christmas.
Well, they do it at the speed of light, and it's frightening. You said that this year you're going to see more of that. So December was the precursor to what we see in 2019. Your prediction, more volatility?
High-frequency trading is now over 50% of the market. So I believe that, with each new tweet that comes out of President Trump, or, we have Brexit coming, we've got the Democrats coming, we've got Mueller coming, there's a lot of reason for volatility.
Okay, so that's the spark, and the high-frequency guys and the robotic traders are the fire. All right, good to see you. Thank you so much.
Nice to see you.